Hey, Jamie and Steve, how's your Monday going?
Hey Scott, happy Monday. Decent
Hello.
Monday over here. Steve, what's happening?
It's a Monday.
It is. And it just happens to be the last day of September. So
Oh,
September's in the books and
fences.
you know,
You did that on Friday.
Muted.
Gotcha.
I'm sorry, I thought I was hearing something there.
It was. I took
I,
care of it.
okay, thank you. All right, well, welcome everybody to
Unmuted.
the office hours. As I was saying, it's the last day of September. September's going to be in the books after today, so October, here we come. All right, so welcome everyone. I'm your host, Jamie Hodge. Got my trusty sidekick, Steve Gomez, in the house as well. So without further ado, let's just get on with the disclaimer here. Just like to make everybody aware of the fact that everything that myself and Steve share with you in this webinar or any of the other ones that we host throughout the week is for educational purposes only. If you do need investment advice, when to buy things, what to buy, when to sell it, all that good stuff, please do yourself a favor and seek out a registered investment advisor or another licensed individual like a Series 7 stockbroker that can legally dispense that type of advice to you. All right, I think that will take care of the legal ease well enough. Also, before we get started here, just like to take a little bit of time at the top of the hour, and in case there are any new people, which there always are a few, to let you know a little bit about the community that we've built and fostered around the award-winning tech that is Trade Ideas Pro. All starts off with Barry's Trading Room. Typically anywhere between, could be 400, 500 people in there on any given day. And Barry Anderson is the moderator in the room. He does a fantastic job at moderating that type of crowd, keeping everybody in line, keeping things productive, while at the same time showcasing his techniques on how he uses trade ideas and his trading style. So over the course of several years, there have, you know, developed a large number of members in there who are also pretty proficient traders as well. So it's a great learning experience, a great place to hang out, whether you are a seasoned veteran or a newcomer to the business. Also, next best thing other than Barry about the room is the price, and that is free. And if you've shopped around the web for trading rooms, you know that most of them, worth their salt, are anything but free, and they can get quite pricey. But that's part of what you get at the TI experience, a free trading room with very competent individuals in there running the show. Of course, on the 5 p.m. Eastern webinars, you get myself and Steve today on Mondays. Steve's going to take the helm for Tuesdays with the Trade of the Week webinar. Andy Linloff rides shotgun with him. Change it up just a little bit, bring in the CEO and our CTO, Dan Merkin and Brad Williams on Wednesdays, good old hump day. Always entertaining with those two. If you haven't experienced a Wednesday webinar, highly recommend it. Andy's going to finish off the 5 p.m. Eastern webinars with the Trading Studio, and I ride shotgun with him. And lastly, the Friday support session. It's basically come one, come all, anything TI related. What's different about the Friday support session is, number one, the start time is at 11 a.m. Eastern, and we allocate 3 hours for the Friday support session because nothing is off limits, whether it's simple basics, how to configure this, how to configure that, or whether it's using Brokerage Plus or optimizing and backtesting. Anything's fair game, and you get myself, Andy, Steve, and Sean all in there at the same time, helping you with the topics and knocking out your questions. Okay. In addition to the 5 p.m. Eastern webinars, TI University, 101, 201, 301, and 401. These all start on Monday for 101 and go all the way out till Thursday for 401. The content in these webinars is static, meaning the content for 101 is always the same for 201. So we do host these live every Monday through Thursday, and the start time on these guys is 12 p.m. Eastern. So we do realize that a lot of people might have obligations that keep them from attending live, which is always the recommended way because you can get your questions answered by the educator that is in there at the time. But if you cannot make the live versions, we've got all of these guys recorded on our YouTube Trade Ideas channel. So you can watch them as many times as you'd like, And if you can't attend them live, you can send the questions in to info@trade-ideas.com. We'll be happy to answer those questions for you. So whether you attend live or go watch the pre-recorded versions, the TI University is a great way to get over that learning curve a little bit quicker, and that's always a good thing. New Trade Ideas accounts since we've launched the AI, and as you can see here, first AI module was launched in 2016, right at the beginning of the year, actually probably the last day of December 15th, but we're not counting that. Bottom line is our account base has expanded rapidly since we released the artificial intelligence, and that tells us one thing, and that's it resonates with the users. People are finding value in it. Along with that, the introduction of Brokerage Plus has been a great success as well. You can see the blue bars here are live orders filled that are all being driven by Brokerage Plus, whether it's manual trading or automated, it's all lumped together, and the orange coinciding with demo orders filled. So every month we're seeing more demo orders and more live executions being routed through Brokerage Plus. What does that tell us? That tells us that people like it, and they're using it, and they're continuing to use it. So it's going to be interesting to see what the 2019 bar looks like once this year is behind us. So things are going well. People are loving the AI. People are liking Brokerage Plus. All good. So here we are at today's itinerary, and I guess as always, Steve, if you're ready to take it, talk a little bit about the overall markets. We'll kick it off like that, and then we'll get into the rest of the content.
Sure thing. All right, there's the ball.
And the baton is yours, sir.
All right, can you hear me?
Yes, sir.
All right, good. My screen looks the same, I assume. It's a bigger monitor now. I feel like I'm sitting in front of a billboard or a movie poster. I'm still getting used to it.
You gotta love new tech.
Yeah, my eyes. All right, so here's the story still. The story last week and the story still. You know, is this in hindsight going to become, you know, the giant devil horn double top? That's my double top. Or is this just going to become yet another kind of a cup and handle moving higher? I really don't know. But I have kind of a couple of, I don't know, a couple of deep-seated observations, and what I'm going to do is share that with you, of course. So looking at this again, you know, is this the double top, or are these higher lows going to stay in tune? We really are reaching an inflection point, and that inflection point at some point is going to resolve. Now, one of the things I noticed today, I'm going to share it with you. Before I do that, on the daily chart, just numerous bounces off this 50-day. So the more often that this blue 50-day simple moving average gets pounded on here, the more likely the price action is to find the crack in the ice, is what I'm trying to say with that. You know, we're back in kind of a bad situation here for the bulls in terms of, you know, this was nice right here. We were riding above these moving averages. We could have easily broken out to the upside there, and I was kind of watching for it. But since then, we just kind of dropped back into the range here, and then this range is just a mess of moving averages. Well, yes, we talked about the bouncing off the 50. That's interesting. But what's also kind of interesting is you know, this 10 period is starting to slope and point back down, and tomorrow it looks like it's going to have a date with crossing the 20 period back again. The last time it did that was right here, and we had some additional, you know, volatility after that. But it's something, it's yet another data point that these algorithms and these quant models that make our markets work on. They always are reaching out and feeling where the different data points are. And pivot levels. Let's talk about pivot levels, because that's what I'm seeing here. Not only is the price in the S&P having a very difficult time trading back above this 20-day moving average, this 10-day moving average as well is curling back over, and I really think it's going to have something to say with the price action tomorrow. Let's take a look here. I'm going to zoom way out, and I'm going to open up this chart so we can see a lot better. This is the 15-minute chart of the S&P that we're looking at, and something kind of popped out at me. I actually drew it during the market hours today, but I've taken it off because I want you to see how we arrive at it. It's yet another pivot line, all right? And looking, I'm going to zoom out even more. Looking at the action here, I'm kind of seeing a pivot line, and I'm going to show you where I saw it. It's kind of the highs of today. I'll just put a orange horizontal line in there. All right, now that we have that orange horizontal line, we can look back here, maybe open it up a little bit. There we go. Grab my pen. We had some support. We had some support. Then we had a little bit of resistance, and then we had some support. Congestion, broke down. And then a little sloppy here, but kind of almost on the money there. This is the pivot line that I'm starting to see underneath the waves and on the underpinnings there. If we can't get back above this pivot line, I think we're going to go back and test that 50-day moving average. And let's just take a look at the daily again, because this orange pivot line will transpose over to the daily, and we can start to see again how it translates. All right, so look, we didn't even look at these days back here, but even back here it makes a little bit of sense. Big support level back here, and then tick, tick, body of that candle, tick bottom, tick bottom. So this is an interesting line. It shows up going way back there, and it shows up even a little bit more pronounced in the last few days. This is really what I'm seeing. Support became sloppy resistance, a little bit more resistance, and pretty tight resistance today. If we can't get back above this orange line, which we'll call it, after hours, it looks like it's trading right here. 297.50 is where we are after hours. So this is kind of the important pivot line that I observed, identified today, and we'll be watching again for tomorrow. And if it can obtain that pivot line back above, well, if it does that, it's going to be contending with this moving averages that are going to be coming down tomorrow. So there's a lot happening right here tomorrow is what I'm saying. We've got moving averages and pivot lines all converging together. Very interesting area of resistance and or possible pivot support I'll be watching for tomorrow. That's the S&P, the most interesting of the ones that we look at. If we look at the technology cues, as far as the moving averages, they're a little different. They have already given up on their 50-day moving average. They have already shown a crossing of the 10 period below the 20. So the S&Ps are just about a day behind us here. So this is also kind of a mess. There's no real moving averages supporting it. There's a lot of space coming down here to the 200-day if we do in fact get weak. Transposes. So the NASDAQ Qs are also a bit of a mess. I don't necessarily like the way these reversals wicks came up there. So what I see is the price action under all three moving averages down here, and it's going to need a good reason and a good catalyst to get it back above. If we can get these price actions back above these moving averages and closing higher, I'll get back in the full-on bullish camp again. But I don't really see, I shouldn't say I don't see it, anything's possible, but the odds of it happening are just looking a little difficult to me at the moment. Now, bigger picture, Steve, bigger picture is this has been an incredible bull market. We looked at this last week. This is just the bull market that won't quit. It's been going on forever. At some point, we're going to have it possible. It's shown that it has tipped its hand that at some point we can have a big break of volatility like this. So in this perspective, here we are again. Is this a double top, or is this just a nice cup and handle? We don't know. We're going to find out real soon, probably this week. Looking at the Dow, we need to go back to the dailies here to make sense of really what's going on there. Time frame daily. All right, the Dow still above its 50-day moving average, but oh boy, extremely obvious to the eye that the 10-period fast line moving average, the line of momentum, has got the price action under wraps. Well, tomorrow, if we can pop up and do a close like that, again, I'll change my tune a little bit here and start to say, maybe it is the cup and handle. That's a horrible cup and handle. Maybe it is the cup and handle that's starting to develop. If not, if we break back down and challenge and wind up closing the Dow below this 50, well, then maybe it's the old double top that we don't want to see. Lastly, I always save for last, the IWM, the Russell 2000 has been very difficult. It gave back all of that promising price action that it showed us a few weeks back, ran right smack into a level that just can't seem to get out of its own way with, and back down to the 200-day moving average, broken also the 3, 10, 20, and 50-day. So back on its heels in a defensive stance for the IWM, and I think we can clearly see the story that's been going on forever here, almost all year, and the IWM is just this range-bound nonsense going nowhere. So big funds that are investing in small caps have probably not done very well this year. So back to the S&P. again, it's kind of like the same as last week. Beat a dead horse. Is it a double top or is it a cup and handle? For the moment, the way the daily candles are closing, under pressure, under wraps here, the burden of proof, I'll leave you with this, the burden of proof is definitely with the bulls here in the short term. They have the long-term game, they have the long-term trend, but in the short term here, it just feels a little dicey again. And we've seen in the past, it can get pretty dicey pretty quick. So we're not sitting above these movement averages like a bird in the hand sitting pretty. We're back into no man's land with a lot of twisted, gnarled data points. So that's all I got, JB.
Yeah, and I was about to type out the reply to Anthony's question there, but I'll just go ahead and address it verbally here. You know, he was asking, do you ever see one front running the other, like the Qs move before the SPYs and vice versa? That might be the case from time to time. I would lean towards the Qs sometimes leading, but you don't have enough lead time to take advantage of that. I mean, it all happens pretty much simultaneously, and especially given the fact that, yeah, we're all trading out here, quote unquote, in real time, but not really, right? By the time you notice anything like that, the algos have already jumped on it, whether it's the SPY leading the Qs or the Qs leading the SPYs by a few seconds. Certainly not enough time to be anything meaningful. I mean, would you agree with me on that, Steve?
I do. I agree. I agree that they passed the baton and kind of getting up to these levels the last few months. It was the Qs kind of dragging us higher. But you know, and somebody pointed out, David pointed out that the last year IWM had a couple of good months, but that just went to sleep. So it's a constant changing of the guard, changing of the batons. I think coming in the last 6 months, 8 months, the Qs have been a little stronger. So if the Qs start to get a little heavy and a little weak before the rest, I'm going to certainly pay attention to that, knowing that they kind of let us up, but not too much contrast between the two.
Yeah, you know, when we first came into trading, we used the S&P futures. They were acting, you know, kind of as a front runner back in the day. Yeah. But that was a very long time ago, very long time ago. So yeah, it's hard to find anything, whether it's an indice or even the futures these days, where you have, you know, enough lead time to act on something.
And there will be moments in time, like maybe where the market's, somebody used to say on CBC, when you hear traders talking about bonds, pay very close attention, and so you can watch the TLT and try and derive maybe what the bond market is thinking. So there are times when the stock market's looking for a cue somewhere else, and maybe it's the bonds, maybe it's the dollar, maybe it's oil. We've been through all those chapters in the history of our trading.
This is true. Okay, I'm going to grab the baton back from you, and hopefully you got eyes back on my screen now.
Yep.
All right, perfect here. Let me just make one more adjustment. Okay, we should be good. Okay, all right, ladies and gents. So thank you very much, Steve. Quality info as always. So today was just, you know, what do we have? We had a small gap up, and then we pretty much ran up to new highs and just kind of ebbed and flowed after we popped this new high here, and eventually came back down right to that level. Amazing how that happens. Now, you know, Anthony asked the question about leading indicators, or, you know, hey, can we use this to predict this? Well, you know, look at my compare count window that I like to look at after the first 15 minutes on every session, which is looking at the big boys, the companies capitalized in excess of 4 billion or right at 4 billion or higher. Check out the readings today, 54% red. Really, in my opinion, wouldn't matter if it was 54% green, because anytime we have a bias one way or the other, less than 55%, you know, pretty much what that tells me is what it tells me to expect is, hey, anything goes today. We could go up, we could go down, not enough of a bias to really have conviction. And that's kind of what we had today. And when you look at the longs versus short opportunities out there, or anyway, the ones that I was looking at today, you had just about as good a shot as making money on a short as you did a long. Problem is, weren't a whole lot of stocks trending or continuing. Today was one of those days where if you got up nicely, if you didn't pair some of those gains and lock in the second half for, you know, flat or take everything off the table, well, it didn't stick around for that long. And this is indicative anytime we see, or I can't say every time, but a lot of the times when we see this bias on this compare count window less than 55%, It just tells you, hey, it's going to be a slippery slope, up and down. Take what you can get. Don't expect for, continued moves. Of course, there's always something that's going to do that, but that's the anomaly on these days, not the norm. So not a whole lot to go with off of this window today. Just kind of anything goes type of reading. Now, lost my place here. What we're going to do is go in and talk about Holly, because on a day like today, I got to say, pleasantly surprised at the results that Holly posted today. So if we take a look at the channel bar over here, if we tally up all the trades, we had 30, right at 30 trades. Let's see, is my math right? 22, yep. 30 trades from Holly, cumulatively between all three modules, and some decent totals. As of the close, if we tally up everything here on the, assuming we're trading 100 shares per pop, we get 431.22, all right? And we even had a little bit higher before the close, before we saw the market kind of peel back down here to the lower area before the close, but she was up more than that at one point. But this is a pretty good count, and we're starting to see more and more of these days, even though the market, based on what Steve showed us there, isn't necessarily conducive. The statistical model has been performing. We had a few lackluster days at the end of last week. Before that, really some nice performance, a lot of that on the IWM stocks or the lower cap stocks. But a pretty good assortment of trades today from Holly, posting that over a 4-point total.
And yeah, your slide is still up. Are you trying to show behind your slide? I'm sorry.
No, I was just waxing on about this right here, these totals right here. But
we see the slideshow.
Okay, are you seeing this trade count right here?
No, I'm 30? Seeing your browser. I'm seeing your today's class slideshow. So is Rod in the questions panel.
Right. I had not left the today's class. You see where I'm highlighting right here? Trade count 30, 431.22.
My bad. I was looking at Rod's comment.
That's okay. Not a big deal. So yes, this is what I was talking about. The numbers here coinciding with what we see over here on the channel bar. Okay. Now I will kick this over and we'll take a look. And what we're going to be talking about now, we're going to be going into detail about the risk on, risk off spread regarding Holly. Okay. So whoever was asking that question, yes, now we're going to be taking a look at the all trades blotter for all the Hollies. Notice the segments over here. Notice they're all represented. Why is that? Because I'm using the all trades option here. We could look at the individual segments, but that's not what we're doing right now. Same thing with the strategies panel. We're looking at everything that Holly has to offer through all the modules here. Now, first off, sorted by risk on right here, not a bad blotter. We've got our losers down here like normal, but we've got a lot more up here in the northern part of the blotter where the green is. That's always good. So risk off versus risk on. Now, I'm sure there's somebody out there going, well, what's the difference first and foremost between risk off and risk on? And just to clear the air here before we get into this, risk off is just Holly obeying her rule set like you or I or any other sane trader would do. We make a trade. Well, if we're wrong, we've got a hard stop. If we're wrong, we're going to lose this much. We also might have a profit target in there. And with Holly, because she's a statistical model, she's always going to have a profit target, a stop loss, and a timed hold, because all of these strategies that you see down here are designed around a certain intraday hold time. 120 minutes for this one, 60 minutes, 90 minutes, so forth and so on. So the three hard and fast reasons that Holly can get out of a trade in risk off mode: stop loss, profit target got hit, or the timed hold expired. And you're always going to see why she exited the trade right over here in risk off reason. Now, in addition to those three elements, there are two audibles, so to speak, that Holly can call in the form of reduce risk and profit save. And you can see on some of these trades, she exercised her option to get out of the trade before the profit target or the stop loss or the timed hold had occurred by using either a reduce risk or a profit save audible there. So what we're going to be comparing here is how Holly did in risk off mode right here. And then what would have happened had we stayed in the trade? Would we have made more, or would it have pulled back and, you know, the risk off exit was the optimum exit? So first and foremost here, let's take a look at BLD. All right, and you know what? I'm going to go ahead and tighten these up to 15-minute candles, so we can spread this out a little bit here. Okay, so number one on the list here, we got risk off of $1 that Holly booked in BLD. We've got risk on showing $1.51. Now here we have the entry line. The blue line coincides with the AI's entry price, $16.93, which we can verify here. Oops. There we go. All right, I'm like, that's not $16.93. So what I was going to point out is entry price here is always going to coincide with what we see right here. So BLD, I really like this chart. You know, we pop tops here in the first 10 minutes, cycled down, and then just for a good 1, 2, 3, 4, 5, 6, about an hour and a half, not including the entry bar. Nice little consolidation here, just telling us that buyers and sellers became equal. Holly gets the play here from the breakout strategy at 95 bucks. Not a bad entry, what I like to call a pain-free entry. As soon as we get it, just ebbs and flows a little bit in that 15-minute candle, and then just off to the races in the next 15-minute candle there. Now, target hit. 2 target hits in a row, actually, in these two. Target price was up here at 96. Didn't take long to get up there. About 30 minutes, right, from not including the entry bar. Boom, boom. Target got hit. Hey, great success. But look what happened if we would have held this thing. We would have gleaned another, what, 51 cents holding into the close. So $1 here, but if we, let's see, I'm on the test server, so sometimes these metrics are taking a little bit longer to populate. I'm just going to move this line right up here to where the profit target got hit, and then look what it did afterwards. And this move right here, ladies and gentlemen, there's not a column in here displaying this type of information. So Holly got that nice target hit of $1 right here around the, let's see, entry was 96 or 95, target was at 96. Boy, we cruised all the way up to 97, a little bit past 97. So depending on you know, if you were holding for more, you know, there's a good chance you might have taken some profits up here versus waiting all the way to the close. All right. So there was another $1 in play there past the profit target that's not necessarily reflected in any of these columns here. You might notice max profit column, but max profit is only showing you the most it was ever up in risk off mode, not risk on mode, right? So here we had the opportunity to stay in the trade and enjoy a whole other point here, whereas the max we're seeing here is a point in max profit and, you know, $1.50. So another 50 cents on the table there at the top. Now, another good thing about this trade, you know, if we're in it and we're going, should we take this trade or should we stay in with Holly or, you know, get out because risk off might be the way to go? Well, there's a couple of different ways we can handle this. Number one, notice my fast line, my 10-period SMA. It's always a good sign when we're hovering way above that, right? And notice when it does pull back, we just come down here and kiss that 10-period and then boom, 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 acting like a little trampoline, keeping it nice and tight before we got all the way back up there to the high. And coincidentally, come right back down to it at the close. Now, what's it going to do tomorrow? Nobody knows. What's it doing after the market right now? We could always take a peek and just say, hey, what's it up to after market? And notice we came down here and kissed this, trading down a little bit in the post market. Just wanted to throw that up there for giggles. Doesn't really apply here unless you were holding it overnight. And I thought I saw a question pop in, but it looks like we're caught up. Just let me know if I need to address anything there, Steve. So just a real clean trade in BLD. What are some of the other positive factors that might have been present in BLD, other than the fact that, number one, breakout was the strategy that issued the trade? So we take a peek at the odds coming into the day, 61.5%. Anything coming out of breakout from a statistical standpoint looks like breakout had 2 trades today, only had a winner on 1. So the strategy as a whole slightly underperformed today, 50% versus 61.5%, but it did deliver BLD. Well, actually 2, but we must have duplicates in there. Yep, we got duplicates in there, 1 from each module. Okay, just want to make sure I wasn't seeing things there. Next on the list, MOH, but we can see here there is no spread between risk on and risk off because risk off pegged it pretty good. But the same thing holds true here. Target hit of $1. So we can see the entry line right here at 109.04. Target gets hit. Holding into the close, we would have made less, but look, it's just like the other BLD, the other trade BLD. Another point of run between 110, the target getting hit, and up here capping out at 111. So once again, ran another point from the time that Holly got her profit target hit. So there was another $1 available there for a total at the best, if we top ticked it, of $2. Same here, same here. Whereas if we held into the close, a big difference between $2 potential and 82 cents holding into the close. But pretty much a lot of things did this as we got that little weakness in the latter half of the day there. Hey, Joe, let me just read your question here. If you have all the Holly trades up, it'll send notification when Holly takes a trade and gets out with risk on. Well, this blotter here that you're seeing, this is all in real time. You know, at the beginning of the day, this thing is blank. And as the trade cycle it, you get the exact entry time, as you can see over here. For example, if I go ahead and sort the blotter by entry time, you can see EVH was the very first trade from Holly as a collective today, and that was 20 minutes into the open, 8:50 and 46 seconds in my time zone, which is central. Market opens at 8:30. So you see all of these things generated in real time. The easy way to describe this is imagine Holly's a person, right? Starts the day with a blank blotter. As the strategies trigger and the trades are generated, they pop in here in real time. And depending on what you have set up here, every time this happens, you see a little flash when she opens a trade. And you can also see the exit times here. Not only the exit reason, but the exact exit times. So this is a real-time blotter. So things will appear and positions will close, just as if a human were sitting there pushing keys doing it. So Joe, I hope that kind of clarifies the issue there. In addition to that, if you need an audible alert, you can always right-click, come down here to Actions, and activate the sound aspects of the program. You can come in here and set up a sound for many of our predefined sounds, or you can import your own WAV files, text to speech, whatever you'd like to. That way you bring your ears into the equation. If you're looking at something else, you hear the beep, you know, to look over here and see what has changed. Positions closed, new position open, so forth and so on. All right, so back to risk on. So even though there was no risk on in Mohawk, or not, it's Molina, I always want to say Mohawk, but you know, seeing another additional point on the table after the profit target was hit, well, that's something that you definitely want to pay attention to moving forward as you get more and more familiar with Holly. Now, this one's a little bit more obvious. Nike. Nike cracking up here, popping those all-time highs again. What do we have here? We've got a negative 15 cents in risk off, but if we held into the close, we're up 56 cents. So that's a pretty big spread there between negative 15 and 56 cents. Now, why did Holly get out of the trade? Here's one of those audibles right here. Reduce risk and profit save. She made the entry right here, right at the blue line, 93.43. We get a little soft. We come down here. Looks like we might have a chance of getting stopped out. But ladies and gentlemen, that's why we have hard-coded stops. If we're wrong, this is what we're going to accept as a loss. It acted like it was going to dip a little bit, wicked out right down here, coincidentally snapping right back above that 10-period fast line there. But the bottom line is no stop out. But Holly has this algorithm that she can exercise, and this is what she did. The longer she's in the position and it's not working, the more likely she is to close out a loser or close out a winner if it's starting to stall out. So here we see her taking a 15-cent loss. So, you know, looking at this candle close, and she actually didn't close it out till this next candle. So in my opinion, seeing this wick followed by this next candle right here, that gives us a little confidence. Number one, it's staying above that 10 period. It got kind of close to the stop, but it didn't trigger. That's what hard stops are for. So we could have easily made the decision, you know, I'm going to stay in the whole lot with Holly and take more risk, even though she's closing it out and reduce risk. And in that case, we would have been rewarded. Another method, until you get used to seeing these types of plays or making that decision on whether or not you should stay in, is maybe do a little bit of half. You could have eaten the 15-cent loss on half of your lot, kept the hard stop for the second lot, and you still would have been rewarded, just not quite as much. But in the end, Holly closed it out. You know, reminds me of me sometimes. You know, we get bored. We're like, yeah, this isn't working. We're going to close it out, only to see the stock go your direction after you've taken that loss. I mean, or a small gain. I mean, everybody here has probably done that numerous times in the past. It'll probably happen again. But sticking to the hard stops, to me, that's a good thing to do. Now, another good thing about this chart that I like, number one, we had strong volume for the entire day, finishing it with relative volume of 1.64, as we can see in the single stock window. And after we take this little snooze here, what happens? Well, we slowly consolidate, and boom, before too long, we're popping new highs again. So the fact that this is so tame right through here in this area, right, you know, that we're seeing right here in the consolidation, we don't get stopped out. We're in some with Holly. This would have been a great time to bolster or leverage up that position as we're in it, getting back to break even, slightly above the entry line here, and just a few, you know, a smidge away, the daily high, and popping through with volume. We could have, you know, either doubled or added about 50% to that position and really leverage that position into the close. All right. You know, that's a good question, Anthony. About the question was split Holly's long versus shorts over a long period. Okay. Good question. Don't have that information readily available, but hopefully when the year ends, we're always trying to put new spins on the overall data. So that might be something that we do moving into the new year. And Joe, right now, there's no way other than what you see up here. We can do some Holly filtering right here, like only show me open positions, profitable trades, losing trades, or we can tell it which strategies we would or would not like to see. But right now, there's no way to cap price as a whole because all of these strategies are, in essence, very specific events. You know, if you look at the strategies panel, it's a very specific collection of filters with one catalyst or an alert attached to each and every strategy. So it's the event, and the price of the security exhibiting the event really doesn't come into the equation right now. But that's not to say that maybe in the future we might be able to give you the ability to filter by price, but I can't say that that would make statistical sense, right? That's more of an account restriction issue than finding alpha in a statistical model issue. But that might be coming down the pipeline in the future. Can't really say for sure just yet. All right, I feel like I'm rambling here, and boy, time's a wasting. So what we're going to do here is take a look at one more risk on, and then I've got some interesting things to show you guys based on what we started last office hours about using the paper trading aspects of Brokerage Plus and tying that to swing trading and so forth and so on. So I want to make sure I've got enough time to get that covered. PBF, a 12-cent lock-in on risk off, Into the close, we would have enjoyed another 32 cents, which is right about where it closed, maybe give or take a few pennies. But once again, not a bad entry, staying well above the entry line for a good 45 minutes after the signal was made. And Holly closing it out right here. But guess what? We see more of the same right here. As soon as she closes it out, what do we have here? We've got to pop to new highs and then a slow grind higher, keeping in line with that 10 period, acting as the guiding hand once again. Volume a little bit less on this one, only 85% of normal. But hey, sometimes they go on light to normal volume, sometimes they go on heavy volume. So I don't want to spend too much more time on Holly, but hey, impressive results today. Some good risk on versus risk off spread there to collect. And now let's go ahead and talk about the swing follow-up. All right, so in last office hours, I shared some strategies with everybody. One was called the intraday bottom feeder. One was called the noonday knife catcher, which didn't spit out any trades today. And one was the noon fade, which I think added about 3 or 4 to the blotter today. So what I'm going to do here is I'm going to pull my Brokerage Plus in paper mode over here, and these are the trades that have been added. I think I got this thing active on the 26th. I was going to start it a few days earlier, but I reset my layout, so when I came back here, these had all been turned off. In any case, this thing started adding positions on the 26th, which was Thursday, okay? So here I'm sorting by the current open P&Ls, and everybody just needs to take note of total P&L right here. Notice that when I go from total P&L to today's P&L, today's P&L was up about 178, probably peaked out around 250. But notice when I change, the equity curve here isn't changing between total and today's. So there's something going on there, and I don't even know if the total P&L is completely accurate. Total P&L today had been up around 150, and I've seen some wild vacillation since the market closed. But the bottom line is this. At one point in time today, total, which is including all of these positions, not just today's, but total P&L, which is the open P&L right here, was upwards around 150. Now, we can see all the strategies here that issue the trades. We got a couple of blanks in here because, well, that's one of the bugs that we're currently working out of Brokerage Plus. The names will show up on the day of, but then they won't stick around. So that's why we're doing this, getting all the kinks ironed out before we release it to you guys. But what I'd like to point out is not including today's trades, okay? So the 30th is today, and these were the ones that were added after noon my time, okay, which is Central Standard Time, thus the name noon fade, noon knife catcher. It's noon, but it's not Eastern noon. It'd be 1 o'clock Eastern, just for informational purposes there. So these were new additions later in the day. So for the most of today, we only had 12 positions on the blotter and saw the total P&L creep up around 150. And that's not too shabby when we're testing out things moving forward. Another thing I'm going to point out real quick here is that normally for this type of model with the position sizing that I have going on, which is $2,000 per trade, and it's just going to get as many shares as it will. The stop loss on these has not been activated because, well, that's what paper trading is for. It's to give you an idea of how things will play out. In this case, if we're taking multiple positions and having a blotter with 10, 20, 30 positions on there, okay? So I just wanted to see, well, at the worst, how bad would the losers get? And you can see here that Sage is not behaving. It's only in 10 shares, but it's down about $100. That's 10 points. X's isn't behaving. It's down about $82 on 16 shares. But the bottom line is this. Keep in mind, if we were vacillating around 150 in total P&L, and then I had cut these with a stop loss that I have in mind, which when put in play in a live environment would be $50. Okay, that's going to be maximum loss on that $2,000 per trade entry, then we would save 50 bucks here, 30 bucks there. So we'd see another 80 tacked on here. So that means intraday, this thing would have been up on total close to 300 bucks, okay, on 12 what we could call smallish type positions. And you can see biggest position on here is the SBS, 129 whole shares, because it's an $11 stock, okay? So the reason I'm showing you guys this in this capacity is to reiterate what paper trading is for. So number one, we're making it easy because you can do it all through TI now. You don't have to have a paper trading IB account and connect it and jump through all those hoops. As soon as you want to test something, you just throw it in here and see what transpires. So, you know, pretty impressive results based on the back-tested strategies. Everything looks to be working like the back test tells me that it might, okay? So just kind of wanted to follow up with those strategies that I handed out to you guys on Monday and say, hey, look, this is the way that you would do it. This is the way that you would test it. And so far, things are looking pretty decent. Now, come tomorrow, some of these, it's going to be time to close them out on the open. So we don't know what's going to happen overnight. Things are going to gap up, gap down. But so far, so good. You know, keeping in mind that on 12 positions, our commission bill at IB would only be 24, 30 bucks on 12 positions, assuming around about $2 on the round turn. So anytime you're up, commissions plus some on top, that's definitely a good thing, especially when you're testing things out, trying to figure out how things might play out moving forward. Okie dokie. Now, having said that, I want to take this a little bit further. We've got just enough time to cover this, and that is coming up with something else on a swing trade strategy. Now, what we've got here is something very simple, okay? Now, you may hear people talk about 52-week highs, yearly highs, okay? Pretty much the same thing. But if we break it down and say each and every month has approximately 20 trading days, okay? That's 240 trading days in a calendar year, give or take a few, okay? So what I did with this is I've tried to figure out, I didn't really have in mind yearly highs, 52-week highs, 240-day highs. I just started with a number of days. And actually, I started pretty low. I started with 20, and I ran the back test. And I kept taking this number higher and higher and higher, and watching the results slowly and slowly improve the higher this number got. But guess what? Eventually, I got up to 300, things started getting worse. And through back test after back test after back test, I arrived at 250, okay? Now, assuming there's 240 days in a yearly high approximately, we ended up with 250 days. And like I said, I didn't really start out with that in my mind, but this is where things ended up. So we're looking at things that are the highest that they've been in a 250 trading day period here. Now, what's interesting about this is the filter set. Look how simple it is. We got a max price of 200. We got our distance from inside market in there, keeping those bad prints out, because especially when we're back testing, we don't like to see bad prints count in our results. We got the earnings per share filter in here, not because we care if the companies make or lose money, but most of you out there probably know why I'm using this. It's just to keep the ETFs and iShares out. The workaround that basically a hack that we figured out that you could use the earnings per share for to keep out the ETFs and iShares. But one of the biggest problems when generating decent looking back tests that I've run into is that you might find something really juicy looking, but when you look at the stocks that are being generated, they're all extremely low volume stocks with big spreads. And we all know that that's not good, especially when you're adhering to a statistical model, okay? So I said, you know what? I'm just going to pop 1 million shares a day in there over the 3-month average because, well, I want to find some things that are pretty, well, thick. And typically, if they're trading 1 million shares a day too, they're going to be liquid names, and most of the time, but not all the time, the spread's not going to be very big at all. Okay, so that is the kicker here, is all of these stocks over the past 3 months are averaging 1 million shares a day or more. All right, so this is so simple. Okay, but let's take a look at the back test here. All right, general rule of thumb, always avoid that opening 5 minutes because, well, crazy things happen, and there's probably no way we could get the prices that are flying through there in the first 5 minutes. So adhering to that rule, we're not starting until 5 minutes after the open. As I said, this is a swing trade, and for, I was shooting for something for basically a week hold, 5 trading days. So we got at market open tomorrow plus 4 days. Risk management. Okay, now kind of circling back around to what I was talking about when I was running those strategies in Brokerage Plus, I just wanted to leave it wide open because I wanted to see what would happen if I'm just playing the odds, playing those casino odds. Yeah, some are going to lose, some are going to win, but don't want to get stopped out of something only to see it go my way. But when we're putting live money into play, even when it's a swing trade model, we do want to protect our downside. So keep in mind, this is a swing trade model and we're doing small positions, but getting into a lot of them. So we're using a constant amount here of a 5% swing trade stop loss. Doing a 40-day back test here, about 2 months on the calendar. So, and this is a fade strategy, all right? We're fading and hoping that we can capitalize when these stocks pull back, because we all know, hey, just because something's popping that all-time high, even if the chart looks very conducive and tight, does it always work? I think we all know the answer to that. All right, so this is what we're ended up with. And I'm gonna drop this into the chat because whether you just play the stocks coming through here as is, or I let the little room for you guys to do a little experimentation. We've still got 750 trades coursing through this thing over a 40-day period. So it's good as it is, but then there's some leeway in there for you guys to pop in here and put your own spin on it, as far as maybe you want to change up minimum maximum stock price. Maybe you'd like to start doing a little optimization here as well. But this is a very good palette to work with, or trade it as is, obviously on a manual basis, checking out the plays as they come. So on the daily, we've got nice distribution here. We're going to have our losing days just like anything else, but a lot more green to the upside here than we see down here. Looking down here, we've got, basically I've only tooled this one up for $500 per entry, just to give us an idea of some realistic way to trade these things, especially the nature of this event here. You want to size down a little bit because of the nature of it, but still employ good stop losses and whatnot. Biggest losing day, 300 and change, and almost a triple on the biggest winning day, which is what we like to see. 7 winning days in a row has been the biggest run that it's been on, and the biggest losing streak, 3 losing days in a row. Now, what I've done here, since we're talking about overnight holds here, most places are always going to give you 2-to-1 on overnight holds in margin, not the 4-to-1 that we get. So 37,000 here should be about right at 2-to-1 there, 3570, yeah. So maybe just a little shy, maybe we bump that up to 38, but you can still see strategy return on the monthly projected and the annual projected, not too bad. And what I'll say about this is realistic, okay? We can generate sets that say, yeah, if we took every trade, you're looking at a 200% projected annual gain. Everybody just needs to keep in mind, hey, most money managers cannot beat the S&P 500. So we don't have to have astronomical numbers in strategy return on monthly and the projected annual. But the quality of stocks that are coming through here, if we just pull up a winning day at random or a losing day, it doesn't really matter. We can see all the symbols here. We can come back and get an idea of what these charts are going to look like when these plays are coming out, And this is what I recommend for everybody to do, because it gets you used to seeing what these charts hopefully will look like if the trade works, right? MAXR, entry up here, brokerage plus is always going to be notated. So, keep in mind, a good thing to do is go back and just kind of get an idea. Okay, well, if this trade does work, this is what it should do. Liquid stocks trading in excess of 1 million a day. Just pretty eye-opening, right? When we look at the patterns that are being put in here. So, counter entries, Steve and Andy and Sean and I talk about these all the time. They can be scary, but if we apply some statistical probability to them, and then we make sure the stocks are liquid, which in this case they are, and I was pretty pleased to find these results with these stocks that are trading 1 million shares a day, because it's not that easy to do when we're back testing most of the time. All right, so I know we're running out of time here, so I'm going to go ahead and put this back on real time. Go ahead and save it to the cloud and generate that link. And for those of you who already have access to Brokerage Plus, go ahead and load this bad boy up, let it do some hunting, and just get familiar with it and see what happens. It's what it's all about, experimentation in paper mode. And keep in mind, a lot of trades coming through this thing, so there is room to put your own spin on it with some optimization, or just try some new things out and see what you come up with. All righty, so Steve, do I need to backtrack on any of these Anthony questions, or?
Well, you've been rattling on about back testing, so I'm sure you've touched on it.
Okay, all right, so yeah, all right, so we got 1 minute left here, so I got to bring Scott in here to walk us out. And Anthony, I will read your paragraph as Scott is walking us out here. And if there's anything that I can shoot you via email or anything, just let me know. Okay, Scott.
Yeah, thank you. A couple items as we kind of make our way out of today's webinar. There's a summit coming up in October. If you can make it to San Diego, we'd love to meet you. We had a great time at last year's. Just go to trade-ideas.com/summit to see a complete list of the speakers. Use the code you see on your screen there to get a discount for a ticket to attend in person. You can also sign up for the live stream. Trade-ideas.com/livestream lets you watch live, as well as get a link to the replay once that's available. So check it out. We'd love to see you come into town. There's still some hotel rooms left over in our hotel block that are discounted. Act now and get one of those. We've got a new series of ebooks. Go to trade-ideas.com/setup to get them. Both Jamie and Steve contributed chapters to these, so don't miss out. There are 3 books, 2 chapters each, ranged by topics. Trade-ideas.com/setup. Put in your email address, get the download link, get them today. There's a podcast, new episode out on Fridays. Search for Trade Ideas Podcast wherever you listen to your podcasts and hit the subscribe button. Get ready for the next one. And check out the archives. There's a code, Summer End, all caps, like you see it on your screen. That's good for a 15% discount off of any subscription, Brokerage Plus, or upgrade from Standard to Premium. Keep in mind, since it's the end of the month, this one's only going to be good until Monday, next Monday, because that's when the next office hours webinar is, and it will be replaced. Any questions, email us, info@trade-ideas.com. That goes into our help desk software, gets routed to the appropriate team member to answer your questions. You can also follow Jamie on Twitter at QuantBot, Steve's at TodayTrader, we have at Trade Ideas, and our Facebook handle is Trade Ideas Pro. Follow that, share it with your friends. Thanks, everyone. We'll have the recording up later on tonight or tomorrow.
See you tomorrow.
Thanks, everybody. Thanks for popping in. We'll see you later. Bye-bye.